executive of Frontier Advisory, who's with us in studio, just back from China, Dalian. Did you see much of our CNBC team there?
I did. I spent just during office hours, work hours, and also after work hours as well.
I heard from Samantha
you
that there was some dancing going on.
There was, admittedly.
You guys have a good time in
well, it's
China.
all in the name of sort of, promoting the brand of our country and our economy and investment promotion, Alec.
Fantastic. Did you have much success, though? Are the Chinese pouring more money into Africa as a result of all the WEF discussions in Dalian?
I'm not sure. China's going through policy change. The state-owned enterprises are slashing budgets, even things like travel. So the sovereign wealth fund types for SOEs, sovereign wealth financiers, even their travel's being cut these days, particularly to Africa. So I'm not seeing any very big decisions taken this year. I think this year is about repositioning. I think next year, hopefully, things will start to be once again coming through the pipeline.
That's interesting, Martin, because you have a perception sitting in the African continent that there's just this tsunami of money coming from China that desperately wants to get into Africa. So you say it's going on hold at the moment?
Geopolitics underpins this relationship. Ultimately, the majority of the capital is from two financiers, China Exim Bank, China Development Bank. Mentioning China Exim Bank, interestingly, the CEO of China Exim Bank, Mr. Li Ruogu, who is not single-handedly, but it's the main driver behind China's sovereign wealth fund sort of financing thrust into Africa. Recently had his contract renewed for another 5 years in March. That's a key point, I think. With him, there'll be consistency in policy around Exim Bank. But nevertheless, a lot of their clients in the state-owned enterprise space are increasingly cutting back their hurdle rates. Their profit-seeking is now higher. These companies are becoming more marketized. I think ultimately this will start to feed into their Africa strategy as well. Not immediately, but medium-term, yes.
What's the status of the BRICS Bank? There was a lot spoken about it in March at the BRICS meeting here in South Africa.
There was. It didn't come up in Dalian last week at the World Economic Forum. We had a BRICS Business Council meeting here in Johannesburg about 3 weeks or so ago. That's the business-to-business sort of grouping across the BRICS economies. There has been increased momentum toward it, but again, I think the stabilization fund, the IMF counterweight, seeing the $100 billion commitment is a lot more sort of clear than the BRICS Bank at this stage. I think there's a lot more detail to be thrashed out from what they're calling the NDB. We thought it was going to be the BDB, BRICS Development Bank. Now it's been called the NDB, the New Development Bank. So I think there's a lot more sort of work to be done on that.
So Jacob Zuma's dream of having a BRICS Development Bank headquartered in South Africa is perhaps a little premature.
The initiative is there. Momentum was started in Durban in March. I think there's a lot of work still to be done. And from a Chinese perspective, at least, they're saying, well, hey, the BRICS countries at least are wanting a development bank, which lends in a more developmental fashion, financing sizable, perhaps multinational, regional infrastructure projects. Now that sounds all very well. If you're sitting in Beijing, the response would be, well, that's what we do already. It's called China Development Bank. It's called China Exim Bank. So the Chinese thinking is almost, well, this is replicating something we already do, and how will this, coexist or perhaps even be countering our, being the Chinese, own financing interests, infrastructure interests in Africa.
What's the mood like in China at the moment?
I think at a business level, politicians remain pretty robust and upbeat around the economic growth prospects. Still talking about 7.5, and that's very realizable. I think the headline growth figure will become less and less important, if not, it has not already. It's very much of a mentality of state central planning when your government sets a growth target. I think what we'll see going forward is not so much the headline growth, which is more of a quantitative figure, but more quality indicators and quality targets, employment creation, for example, maybe even inflation targeting in China as well. So we'll start to see more qualitative inputs around this, what is increasingly a meaningless, some would say even silly, headline growth figure. And we all sweat the decimal points, whether it's 7.5 or 6 or 7.2. At the end of the day, it's actually irrelevant. At a business level, there's a lot of pain out there. A lot of consolidations taking place, increased marketization in a number of sectors. At the moment, it's renewable energy, construction is coming soon. So we're seeing this almost a very, and I talk about this quite a bit, a lot of Darwinian type economy in China, where you have the ruthless competition as the economy marketizes, and marketizes incredibly quickly. And with a new government post-March, there's a far greater will to marketize, liberalize the economy even further in sectors that before were relatively and very closed.
So that 85 million that Africans talk about so often, about unskilled or low-skilled jobs moving to this continent away from China, is that...
I think it's
the momentum gathering?
This figure of 80-odd million jobs departing China in the next 10 years came from some work by Justin Lin Fu, the former chief economist of World Bank, who's now back in Beijing as an academic at Beijing University. And because of rising cost pressures, a so-called Lewis turning point, cost of production outstrips gains in productivity. We're seeing the migration of Chinese labor-intensive manufacturing at the bottom end to other regional countries. So Vietnam has become almost a sub-factory of the Chinese manufacturing machine. We're seeing even perennially failed economies like Philippines benefiting from this, attracting Chinese investment. Myanmar, Thailand, Indonesia. The question for us,
close, yeah.
Very much so, and it takes advantage of a Chinese sort of, dare I say, high-trust diaspora as well. And culture plays a major part here. Interestingly, Nike shut down its last contracting operation in China in July 2012. And they're often the first movers. So the force is there. The depth of China, this is the third wave of Asian deindustrialization. We saw Japan in the 80s, Korea in the 90s, relatively smaller, and now we're seeing China, 20 years later or so. It's beginning, this Lewis turning point is not a specific point, but it's beginning of a long-term trend. So the question for us in our part of the world is, which African country is going to be the Vietnam of Africa? I think the opportunity is immense. It really is. If our a figure put out there, how many Africans work in factories? And the figure is maybe 10 million. If we are able to capture merely 10% of this 80-odd million jobs supposedly departing next decade, we double our industrial manufacturing workforce.
Guess there's all kinds of questions that flow from there on labour relations, etc., etc. But just to close off with a couple of things, and I know this is a little bit off your normal focus, but Tencent is such a big company now in the life of the Johannesburg Stock Exchange.
Yes.
If you own Satrix 40, you've got an exposure to Tencent, which is a big Chinese company, 38% owned by Naspers. The stock markets over there, or the valuation of Tencent, have you got a feel or a view of whether things are just hothouse effect or really offering value?
I don't think so. I think it really is value. Tencent, this is what Bloomberg Businessweek called back in last year, actually. This was a $35 million investment in 2001 that Naspers made into Tencent, a Shenzhen-based company. 5 individuals, all of whom had signing power on their account, I believe. They didn't so much had a plan, or they had a budget, really. And 2003 went to IPO in Hong Kong. Today, that stake is probably worth, 13-14 billion US dollars?
No, their stake is worth 100 billion rand, 372 billion rand.
There you go, in US dollars similar to that. So Bloomberg Businessweek magazine called this the greatest private equity investment ever in economic history, and done by a South African company based in Cape Town into China. The numbers are staggering. You have 650 million people online now in China. I was hearing at the forum last week, there was a presentation on e-commerce in China. The numbers are absolutely staggering. There's an indication in 2 years' time, and obviously Tencent is well positioned toward this, in 2 years' time the e-commerce market in China will surpass that of the United States. That's how big it is. It's phenomenal. The numbers I all wrote down is quite something, but it really is this.
So you're sold on the story.
This e-commerce online story in China is an undeniable force.
Well, thanks for giving us that insights. When you're in a country like this and you see an explosion in a share price as we have in Naspers, it's hard sometimes to believe what's behind it. But clearly, it's soundly based.
China's a numbers game, increasingly becoming a value game through key companies like Tencent.